What is going on, traders? Welcome back to the Traveling Trader. Happy Tuesday to you. So today I wanted to discuss a few things. Obviously, the markets. We're going to talk about oil. We're going to talk about the slight recovery that we see in the stock market, whether that is sustainable for the long term, whether there will likely be more blood in the streets. And of course, we'll go over Bitcoin as well as a couple of altcoin trades that we are in thus far. So let us just jump right into it. I'll talk about the market since that is probably what is first and foremost on people's minds. But the markets recovered a bit today, up about, between 1.25% to 1.8% on the major indices. It looks like oil is recovering up 10% today after crashing to levels that we haven't seen before since 1991, the worst crash that we've seen since 1991, which was the first Gulf War. And the reason for the oil crash was because Russia and OPEC couldn't really come to an agreement in terms of how much to cut back. OPEC said that they're cutting production in order to try and boost the price of oil. Russia didn't agree, said that they're going to keep flooding the market with cheap Russian oil. So Saudi Arabia retaliated and threatened to flood the market with their own cheap oil. And that caused the price of oil to tank, obviously, because a few things, because China isn't really operational right now, right? Industry has stopped in China and they are the major importer of oil in the world. There's an oversupply caused there, plus the oversupply that will be caused by the flooding of Russian and Saudi cheap oil in the market. So it's basically an oversupply, and demand is actually going down because of what is going on with the coronavirus in China and now in other countries as well, such as Italy. Italy's on complete lockdown. So oil is jumping in on the volatility game along with stocks, but it looks like oil is recovering about 10% today on hopes that the White House can convince Saudi Arabia and Russia to come to the table and potentially form an agreement. Now, this doesn't invalidate the issue with the coronavirus, obviously, so total demand will still be down. This might stave off some of the decline, but until there's a perception that the coronavirus is handled and or we get a vaccine and or it starts to disappear or dissipate in the same way that SARS did, oil will still be largely down. Maybe not to the levels that we saw in 1991, but it'll still be largely down from the prices that we saw before the coronavirus outbreak. As we said earlier, the stock market is also recovering a bit. This is after Trump floated the idea of a payroll tax cut in response to the coronavirus. Will this help in the long term? In my view, we still have a lot more downside to come. There are just too many factors that are currently pressuring the markets, right? You have the oil crisis, you have the coronavirus, you have the government bonds reaching the lowest 10-year, the 10-year government bonds reaching the lowest yield in history. The US dollar itself, if you take a look, it has just been plunging since the last week of February, hasn't really been seen as a safe haven. And then you obviously have the economies of Italy to worry about now that there's a complete lockdown in that country, and Germany, which was already in a dire state before the coronavirus. So in my view, there's potentially a lot more downside to come. And I'll show you how I'm playing that. I already was shorting the market, the S&P 500, shorting it through put options, as well as individual stocks like Tesla, which I had shorted yesterday, seeing somewhat of a bounce today, but not able to achieve a level beyond the 50-day moving average, which is a bad sign. In my view, Tesla will likely retest the 21 EMA on the weekly chart, which is right here. We haven't tested the 21 EMA since October. It was only logical that we eventually retest that 21 EMA, and that was before all of this mess. And then obviously you have inverse ETFs. These are ETFs that move inverse to the market. So you have an inverse ETF for relatively every index, but the Russell inverse ETF, the Russell 2000, is one that I really like. And again, I'll send all these plays out in the trade alert. So if you want access to that, link is in the description. You get access to the stocks, options, crypto trade alerts, all of that is in the description. But yeah, I mean, these bounces are typically normal as you see governments scramble to try to develop an economic stimulus package. But at some point there is, there's little you can do in the face of momentum, and you will see these bounces. I mean, if we take a look at the SPY, for instance, actually, you could probably see this better on the Dow Jones. This is the DIA, which is the Dow Jones ETF. But if we go all the way back to, say, 2008, when the market started crashing, starting somewhere in May, the market really started crashing, and then it was gradually falling, and then it crashed drastically. But even then, even after the crash, you see that we have periods of even 20%, 24% increases throughout the crash. Now, I get it. This was a recession. The Dow even hit levels, obscene levels. I think the Dow was near 6,000. And personally, I'm not willing to call this a recession yet, but most likely we will be entering a bear market where we'll see 20% declines on most of the indices. So that is just to tell you that just because we see a recovery today of a couple of percentage points or even less than that, I mean, we will see recoveries of even more than that if the stocks keep on crashing. And a good marker, I think, is the bottom in December 2018. And if you remember, this here was caused because of the impasse between China and the U.S., the China-U.S. trade talks. This doesn't take into account a major pandemic. This doesn't take into account an oil war. This doesn't take into account the 10-year bonds reaching an all-time low. So before we get into Bitcoin, I'll just reiterate, if you're a long-term holder, there's no problem with picking up cheap blue chip stocks, right? Talking about companies like Microsoft, like Boeing. These companies are going nowhere. And this is your opportunity to be greedy when others are fearful. And even though bond yields are at an all-time low, covered bonds are still a great place to park your cash while the markets try to figure things out. If you don't need the liquidity, you can certainly just hold your position in the markets and wait for, 1, 2, 3, 4 years, depending on how long this will take. Nobody knows. If there's a major breakthrough as it relates to the coronavirus, then and China returns back to its industrious self and Italy is no longer on lockdown, then of course, that's going to be the impetus for another major rally. But nobody can tell you when that will be. And then for those wanting to engage in a little bit more risk, then like I said, you have many ways to short the market. You can do it through put options. You could do it through inverse ETFs. You could do it through actually shorting the stock itself, as we did with Tesla. All right, let us get into Bitcoin. So looking at Bitcoin is in a weird spot here. It was definitely following the market for a bit, where every day that the market would tank, Bitcoin would tank, and it relatively still is following the market. There's a little bit of a recovery today in the market, and you see Bitcoin up a couple of percentage points as well. Bitcoin finally broke to the downside from this ascending broadening wedge. We are now potentially forming on a larger scale, an inverse head and shoulders here, but that's just a projection. It's currently not formed. Obviously, we have to find support at this level here. The critical level, in my view, is around 7,300. If we fall below 7,300, then we can rule out this pattern here. But 7,300 would still be a level that can sustain a right shoulder in an inverse head and shoulders. And if we take a look at the weekly, you'll see that this level has confluence as well, because that is right around where the 100 moving average is, right? So 7,300, and we have to find support above the 100 moving average for it to remain somewhat bullish on the weekly as well. And you also see that the weekly is forming this potential inverse head and shoulders. There's the left shoulder, there's the head, and then if we find support above 7,300 and bounce off of there, then you have the right shoulder as well. I always maintain that, I didn't think we would get to previous swing highs of 14,000 before the halving. Just based off of the previous halving, the previous two halvings, we tend to see a drop of 30%, between 20 and 30% before the halvings, followed by a gradual rally post-halving, right? And so now we are down from the swing high that we saw in February. We're down about 23%. If we get down to 7,300, that'll be around 30%. So it is still all within, it is still that's in play. The fact that we might drop to 7,300, form a right shoulder before seeing a bounce to at least the 10,500 mark. And then if we take a look at the daily again, you'll see that the level that we're finding support at currently is 0.618. And the 0.786 level, which is also a key fib level, is at 7,300. So there is a lot of evidence pointing to 7,300 being a major level of support. Now, it doesn't mean that we will break this and get to 7,300. But if we do break, the 7,800 mark, then 7,300 is looking to be a major confluence level of support on both the daily and the weekly. Now, we're currently up on our Bitcoin trade as we bought Bitcoin here on this dip that we see yesterday, but that is more of a midterm play. Again, if we do fall to 7,300, I'll definitely be picking up more Bitcoin here, and I might even initiate a long from 7,300 if and when we get there. Again, if you want access to the trade alerts, link is in the description. We also had a nice play on Link, buying the dip here as it tested the 50 moving average and had a nice bounce. I think there's still about 8 to 10% upside left on Link in the short term, as it will look to retest the 10 MA, which is hard to see on my chart. But Link is doing significantly well in this crypto market downturn. Anyway, that is it for this video. In summary, if you're a long-term holder, then you could certainly keep a hold of your stock portfolio. You can even pick up some more cheap stock, although I think the market will continue to decline and we might be able to pick it up cheaper than it is currently. If you want a little bit more risk, then look at the inverse ETFs. Learn how to short the market either through put options or shorting the stock itself. If you need help with that, you can do one-on-one training with me. That same link is also in the description. Sign up if you want access to the crypto stocks and options trade alerts. And you also get access to the trading group where we do voice chats, we chat on text, we talk about trade strategies, ideas, TA, etc. All of that is in the description, and it'll cost you less than a cup of coffee a week. Subscribe to the channel, hit that notification bell, leave a thumbs up if you got anything out of this video, leave a comment if you have an agreement, disagreement, comment, question, etc. I like to hear from you guys, so leave it in the comment section. Stay safe out there, traders. Peace.